I'm Charlotte McLeod with investingnews.com, and here today with me is Rick Rule, proprietor at Rule Investment Media. Thank you so much for being here. Great to have you as always.
Thank you, Charlotte. It's nice to talk to you again.
Good to be checking in. And so we're here at the New Orleans Investment Conference, and it's the 50th anniversary, quite exciting. And you mentioned on stage yesterday you've been attending since 1986. So I thought we could start by taking a look back. Any takeaways over the years, moments that you would want to mention?
Yeah, I think first of all, it's important to note the longevity of the conference. This conference, going way back in time, 50 years ago in time, was formed primarily for the purpose of legalizing gold ownership by private Americans. Prior to that point in time, it had not been legalized. And I think it's fair to say that the conference has been an important part of the gold movement in the United States, and important really even in libertarian political circles in the United States around individual rights. The conference has been as much a political conference as an investment conference for 50 years. Certainly now it's much more political. But if you look back at who the various guests have been, Margaret Thatcher is an example over the years. It's been almost a cultural event among the gold crowd. And I wouldn't say that one thing really stands out over the 35 years that I've been, but the continuity of the conference, the theme of the conference, the fact that there has been a hardcore of maybe 200 attendees who have attended literally for decades makes it a very interesting conference. I'm delighted, of course, that the conference survived the demise of its founder, James Blanchard, rest in peace, and happy to see it.
Yeah, I really enjoy hearing the history. I think I'm on now my fifth year attending, and it's one of my favorite conferences. So good to hear your thoughts on that. And you have been on stage, as we were mentioning before we turned the camera on, many times already during the conference. And in one of your talks yesterday, you mentioned we're in the early stages of a precious metals bull market. I wondered if you could expand on that, because I'm seeing many of our viewers wondering, where are we in this cycle, so they can figure out how to position.
I'm afraid that's a long answer, Charlotte, but you can cut what you need. When people ask me when is gold going to move, which happens frequently, I say to them, I think it's going to move in the year 2000. In 2000, it was $253 an ounce. Now it's $2,600 an ounce. It's a seven-fold move. It's moved 8.33%, something like that, for 40 years. 26 years. That would seem to me to be a move. Will gold have a hyperbolic move? I'm afraid it will. I hope it doesn't, because the set of circumstances that makes gold do well does very poor things for the rest of your life. And my life, like yours, is pretty good. But yes, I think we're in the early stages of a real gold bull market.
Okay, that wasn't even very long of an answer. It was quite concise, so thank you for that. So speaking of positioning, I think another thing that people are looking at right now in terms of what should I do with my portfolio is we've just had the U.S. election, which very conveniently we have this conference happening after. So any special considerations heading into a second Trump presidency?
If the question goes around the economy and gold, I think it's going to be more of the same. I think there's a lot of bluff and bluster. I remember after Reagan was elected and everything was going to change, there was a wonderful book called The Triumph of Politics that detailed the derailment of the Reagan Revolution by the Washington political process in 3 or 4 months. And I think that's exactly what's going to happen. I think that, partisan conflict will continue. I think that debt and deficits, excessive government spending will continue. I think packing of the court and the bureaucracy by both sides will continue. Americans who believe that they can believe in anything other than their own efforts and the efforts of their neighbors. Americans who believe that any substantive good will come out of Washington will be very disappointed.
Right, and I've been thinking, okay, so we've already had Trump as president one time, and just thinking forward, can we use that as a little bit of a blueprint on what's going to happen next? It feels like maybe not. What are your thoughts?
I think the system constrains people. If you think about what really happens in Washington, legislators are influenced by organized groups where the benefit is confined to that small group, but the cost is diffuse among many people. That's the nature of the process. It's really all about the division of wealth as opposed to the creation of wealth. And sadly, that's going to go on.
And let's take a look at gold under Trump as well. So I know this is not really of concern to you, but after the election, we saw gold go down. It's on its way back up. The day-to-day, I know you don't worry yourself too much about that. But I'm thinking more about whether Americans will feel that they need to own gold under Trump.
I think for the next 6 months that Americans of conservative persuasion will believe that things are going to be okay. Their guy's back in the saddle. I think that's a huge mistake. Gold does well when people are concerned about maintaining the purchasing power of their savings. And I think that's a virtual impossibility. There is $36 trillion in on-balance sheet liabilities. $36 trillion. To put that in perspective, the U.S. GDP is $31 trillion. More importantly, there's $100 trillion in unfunded liabilities. That's the net present value. Add those two together, you got $136 trillion. The IRS suggests that the net private wealth of Americans is $141 trillion, which is to say the debt almost exceeds the private net worth of Americans. The only way that you avoid an honest default, saying we can't pay the debt, is a dishonest default where you inflate away the purchasing power of the debt. Charlotte, you're too young to know this, but in the 1970s, we did that. According to the government's own statistics, in 10 years, we inflated away 75% of the purchasing power of the U.S. dollar. Not coincidentally, that same 10 years, gold went from $35 an ounce to $850 an ounce. Is past completely prologue? No. But like they say, history rhymes.
Okay, very true. I think good to go into that. And let's talk a little bit more about the conference. So yesterday, you're the moderator for the Mining Share panel.
Right.
I think you were holding people's feet to the fire. I enjoyed it. One of your questions was, will the discrepancy between the performance of commodities versus stocks and what's the timeline on that? So curious to get your answer on that question.
The best answer I heard was that the discrepancy is already being removed for the best companies. And I think that's useful. If you look at Wheaton River or you look at Agnico Eagle, Alamos Gold, Lundin Gold, they're up between 60 and 100% this year, which is a pretty good move. If you look at people that missed guidance, Newmont, Barrick, they aren't up at all. If you look in the high-performing juniors, the people who are making discoveries, who are delineating discoveries, who are run by high-quality people, when they go to raise financings, the financings are oversold, oversubscribed. I've probably attempted to participate in 25 financings in the last 18 months, and in probably 20 of 25, I've been cut back. So the idea that the industry is undercapitalized is, I think, fallacious. I think that the economic circumstance is less generous with undeserving companies.
Okay, I thought that was a good answer too, so good to get your thoughts as well. All right, and so looking a little bit more about gold stocks and when they will move, we're at the 50th anniversary of this conference, but I saw it's also the 20th anniversary of the GLD ETF. And I wondered if we could look back at that and consider whether that is something that has taken attention away from gold stocks being, an easier way to get exposure. And since then, of course, there's been multiple gold ETFs available.
I'm not sure that that's been as much of a factor. I think GLD has been a factor of the gold price. But what you learn is, in my experience, bull markets are always led by gold. But then there is follow-through on the gold stocks. What we aren't seeing is very much generalist participation in the gold space yet. And the thing that tells me that we're early in a bull market is if you look traditionally, the momentum in gold attracts Wall Street and it attracts Main Street. It attracts the generalist investors to the space. We really aren't seeing that to any great degree. What we are seeing is a changing demographic in the gold space. and that's something that we needed to do. The gold industry investor for many years looked like me, old, fat, bald, white. When I look at my database at Rural Investment Media, who the new people coming in are, they are overwhelmingly over 50, majority under 40. Amazingly, at the top line, over 30% female. There's a demographic in the gold industry that reflects, of course, the demographic of humankind. But there really is a changing face in the gold industry. Perhaps it is that that the industry itself is beginning to reflect humankind as opposed to conservative white American males.
Yeah. Interesting to get those takeaways from your database. Okay, so talked a little bit about gold. We know that it's no secret that silver lags behind gold in a bull market. But, I always like to reach out to our audience and see what questions they have. And multiple people asked this round, what about platinum? Is there any lag effect associating platinum with, gold and silver?
I think with platinum, because its predominant uses are industrial as opposed to monetary, that you are going to see platinum utilization reflect underlying industrial fabrication demand more. We have at Sprott, the Sprott Physical Platinum and Palladium Trust, and while our gold and silver trusts are, $5 or $6 billion products, the Platinum and Palladium Trust is a $300 million product, which will tell me, at least in the United States, that investment demand for platinum and palladium are sidecar markets. There has been a traditional affinity for platinum jewelry and platinum bullion ownership in the Far East, in Korea, in China, in Japan. And we haven't seen a resumption of physical demand for platinum for investment purposes in those markets yet.
Okay, yeah, no, it's interesting to me. We had several people ask about it, and I know that you've mentioned platinum palladium to us in the past.
I'm very attracted to it. I'm attracted to it for probably three reasons. The current oversupply is at least partly due to Russian dishoarding. They obviously need some money, and they had some platinum to sell, and I suspect they sold it. The second is that the current narrative is that the internal combustion engine is going the way of the dodo, and platinum is used to fabricate, catalytic converters. I don't think the internal combustion engine is going away for my lifetime. 71 for reference, and I hope it's a long one. The third is that the production of platinum and palladium are constrained to South Africa, Russia, and Zimbabwe. The possibility of more intense social or political disruption in any of three of those markets is, I think, strong. I'm not saying it's going to happen, but if it did, you could easily see a dramatic reduction in platinum and palladium supplies. And I think because of the importance of platinum and catalytic converters, you'd see no reduction in demand, despite price increases. I'm not saying that's going to happen, but it's a consideration that made me buy a little bit just in case.
Yeah, I think people are starting to catch up to you on that one. Okay, I'll bring you another viewer question, this time on silver. We had one person wanting to know, what are your thoughts on Argentina as a silver mining jurisdiction, and specifically with a new junior silver company from Frank Giester, Argenta Silver?
I don't know enough about Argenta. I know that the deposit is a decent deposit with good grade. I understand it to be currently metallurgically complex and challenged, so people need to do some work on the baseline with regards to the processing technology. Argentina, obviously, as a destination at the top, is improving dramatically. The reduction in government in Argentina means a reduction in bureaucracy. A reduction in bureaucracy is always good. The new president, Milei, said he wants to remove the roadblocks for resource development so that resource development can begin to benefit the Argentine people. So in a variety of industries, including copper, agricultural minerals, and of course oil and gas in the Vaca Muerta, there has been a real sense of progress at the federal level. People need to understand that the regions in Argentina may not all be as pro-mining as the center is now. Well, you're seeing lots of development in Salta, in Jujuy, In other provinces, Santa Cruz as an example, there isn't as much forward momentum. So we'll just need to see.
That's great. So since we're almost at the end of the year, I thought we could do a little bit of a retrospective for 2024, look forward to 2025. So starting looking back at 2024, what was your best performing investment of this past year?
The easiest for me, and we talked about this late last year, the silver juniors were stupidly oversold. People just hated them. And I think I described them, talking to you, as a coiled spring. And that trade happened. The better silver juniors are uniformly up 200 or 300%. Before there was a silver bull market, it happened just because they were so oversold and they were so hated. That worked. Less well known, but of more benefit to me, frankly, has been the performance of the very best gold stocks. The Wheaton Precious, the Agnico Eagle, even Franco-Nevada, which was punished, of course, by the nationalization of Cerro Colorado. The operating performance at Franco-Nevada, the margins, the free cash flow, has been dramatic, and the market has started to notice that. I think the other theme for 2024, that I think continues and accelerates into 2025, was the gradual realization among the investment community that oil and gas is here to stay. The oil prices didn't go up, but the operating performance of North American oil and gas companies, particularly Canadian oil and gas companies, hobbled by low energy prices and hobbled by a hostile federal government, the operating performance has been fantastic. The share price performance has been less fantastic because the oil and gas narrative isn't strong, and the anti-oil and gas political narrative, particularly in Ottawa, is very strong.
Yeah, and that kind of feeds into my next question, which is, of course, highest conviction centers for 2025.
I would say it depends on if you're an investor or a speculator. I think if you're a speculator, that you're going to see real moves in the better gold juniors. Real moves, if you can afford to take the risk. Pardon me, Charlotte. If you're an investor, you want to be way overweight the oil and gas space. And if you're a Canadian investor, you want to stay north of the border. If you have a federal election, and if Canadian voters decide to allow the Prime Minister to afford other employment opportunities, I think you see the Canadian oil and gas sector basically double overnight. But on a BTU equivalent basis, Canadian natural gas is just too cheap. One thing the Reagan administration will do for sure is loosen the regulatory constraints around the transport and transmission of oil and gas, including Canadian oil and gas, a method of exit from your market to the world. And that will be hugely beneficial. But even the investments that have been made, moving natural gas from Alberta to West Coast ports for liquefaction, will make a real difference in the ability of the Canadian industry to sell supplies and make money.
Yeah, I think certainly that would be something to watch. You know, we pay so much attention to the American elections, but we are there in Canada. So we'll see how that pans out. All right, my last question is, we'll see. I think it's a fun one. We'll find out. So I think people who follow you, they know you for many of your catchphrases, your Rick-rollisms. And I saw even on Twitter the other day, bingo card, which was quite fun. I don't know how many we'll get in this conversation. But if we look forward to 2025, if you had to choose one of those to apply to the year, which one might it be?
I have to give you two. For people personally, most of us have been living beyond our means. And I learned a little poem when I was young. It applies to governments as well as people. It goes like this, Charlotte. When your outgo exceeds your income, your upkeep becomes your downfall. That's a long way of saying, don't live beyond your means. For investors, there's a very different one. You will either become a contrarian or you will become a victim. When a sector is out of favor or unloved, it deserves your attention because natural resources are cyclical. And as they come into favor so quickly that if you didn't get on the bus ahead of time, you missed the good part of the move. Similarly, if you're in a sector that comes into favor and has that move, you haven't made the money until you take the money. When you see gold on the cover of popular magazines, and you see popular media covering, gold bars and stuff like that, when gold becomes part of the popular culture, like it was in the 1970s, you got to remember to sell some. So, contrarian or victim, the choice is yours.
Okay, I will let you go unless you had any final thoughts that you wanted to share.
Well, simply, it's a delight to see you, and we hope to see you in Boca Raton in July in our conference. I guess my final word to your viewers is if you care what I had to say about natural resources, you can personalize it. Go to ruleinvestmentmedia.com, list your natural resource stocks, and for no obligation, I will personally rank them.
Very nice offer as usual, and we'll leave the link in the video description. People can click through if they want to find it. So thank you so much for being here. I do plan to see you at your conference, or hopefully sooner than that. Thank you very much. Once again, I'm Charlotte McLeod with investingnews.com, and this is Rick Rule with Rural Investment Media.